Well, I think the biggest focus we see across the space, I mean, AI is a technology that impacts everything, but really, I think the focus sector across Europe and globally continues to be around software. Software is powering and driving absolutely everything. It helps to increase efficiency across just about everything we do, and particularly in a tougher economic environment where you can look to increase automation through software and technology. You're seeing that spending not being cut to the same degree of other areas. So AI with the focus on software has probably become the main focus, a little bit superseding some of the focus that we saw in fintech and the internet sector over the course of 2020 and 2021 during the pandemic time.
Matt, nice to see you today and hear from your thoughts as well. Look, there's no doubt about it from what you've been saying and what literally everyone's been saying to us this year. AI is where it is the front centre and everything. How are you going to protect your investors and our viewers from absolutely losing vast amounts of money on yet another great tech phenomenon? Because we know that the technology is going to be amazing. We think it's going to be some big winners in there. But let's face it, most companies who are investing in AI now, they're just not going to make it.
Yeah, listen, every time there's a new technology, there's going to be new winners and new losers to come along. I think the most important thing is for investors to be looking to spread out their focus. And, there's not going to be a single winner or a single loser here. We see a lot of investors focusing on how do I build a basket of exposure to AI. There's not going to be a single segment of tech or the economy that's not exposed or impacted by it. And the best thing you can do is make a bet on several of the companies that are going to be exposed to it and be very dynamic, because I think we can only predict what's going to happen, and it's going to change consistently. There's no crystal ball on AI, just as they're done in any type of technology. And so investors are going to be very, very nimble, and in all likelihood, some of the winners are not even on the radar screen, nor are some of the losers right now. So stay nimble. AI will be a big driver, just not for everybody.
You just said something really, well, you said a lot of interesting things, but I thought that was fascinating. Be nimble, be dynamic, but the tolerance for losses of your investors and our viewers, they've got to be more VC-like, haven't they? You're going to get some winners in there, but actually there's a chance that 8 out of 10, maybe 19 out of 20 of these companies are going to fail. Do we need to change our attitude as investors, or do people need to change their attitude as investors to have a greater tolerance for losses amongst their portfolio?
No, I mean, I think it's the same as it's always been. You need to have a tolerance for losses if you're going to be exposed to the higher end of the risk curve in technology. And so if you're going to be investing in particularly the early stage AI companies that are pre-revenue, you have to have a very high tolerance for risk. If you're investing in the major cloud players who are seeing AI as being a big driver, that's less the case. So it's really on what scale, what stage of investment you want to be exposed to. And certainly in AI at the early stage, you're going to have to very, very high tolerance for risk. But that's why the VCs are focusing there, and the big public companies, I think, still have enough different drivers in their business where AI can be just as big an opportunity as a risk, but it's not necessarily going to be a big driver of losses.
Matt, any interest in the IPO market at this point? As I look at LanzaTech and Intuitive Machines, companies that came to market this year, both SPAC mergers. Mm-hmm. Share price is down 40%. The message seems to be this is a very difficult environment for venture-backed IPOs. What do you think?
No, I think it's fair. I mean, the IPO is the riskiest class of equities you can buy, and until investors have confidence in the future and a feeling that the lower volatility environment is here to stay, IPOs are difficult to get away. The ones that are getting done are principally special cases. But what's really encouraging is we go out there and survey the investor base. They tell us they do intend to invest in technology IPOs going forward. It's generated a lot of outperformance if you bought the right ones over time, but they need a more stable environment for economy, and then they're going to re-enter the technology IPO market. So we'll see selective tech IPOs through the rest of this year, but most investors are really focused on the big opportunity in 24 and 25.